For years, we've all talked about traditional finance and crypto like they were two totally separate worlds. But that line in the sand, it's pretty much gone. The old opposition is over. What's taking its place is a single, incredibly powerful hybrid ecosystem. It seems like a simple question, right? But the answer, well, the answer reveals the entire architecture of modern finance. So let's actually follow a single dollar on its journey. We're going to trace that dollar's path step by step through the new infrastructure that's linking the old world of fiat money with the brand new world of digital assets. Okay, first things first, our dollar needs a way to get into the digital world. This is the front door, the main entrance to the entire crypto economy. This critical piece of the puzzle is called a crypto on-ramp, and honestly, the best way to think about it is like a currency exchange booth at the border. It's the exact spot where you swap your dollars, euros, or whatever you have for the native currency of the blockchain. So from your end, the whole thing feels totally seamless. You pay with your money, and boom, crypto just shows up in your wallet. But what's really fascinating is the complexity happening behind the curtain. It's this incredible coordinated dance between payment processors, ID verification systems, and liquidity providers to make it all happen in an instant and securely. Okay, so our dollar made it across the bridge. But what is it now? It doesn't just float around as a dollar on the blockchain. Nope. It transforms into something way more functional. It becomes a stablecoin. These are digital tokens specifically designed to hold a steady value, usually one-for-one with the US dollar. And in this new ecosystem, stablecoins aren't just another asset. They are the cash. They're used for pretty much all on-chain trading, payments, and settlement. They're the fundamental bridge for liquidity. And this brings us to a really crucial split in the market, one that's been driven in large part by regulators. On one side, you have assets like Bitcoin, which are treated like a speculative commodity. Just think of it as digital gold. It's totally fine to own, but it's been kept out of the modern payment system. On the other side, you have stablecoins, which have been built from the ground up and regulated to function as digital money. And if you need proof, just look at the numbers. It's staggering. By late 2025, stablecoins accounted for over 93% of all transactional volume on public blockchains. The market has overwhelmingly voted. When you need to move value, stablecoins are the only game in town. Now, this massive shift didn't just happen in a vacuum. It was all built on a new foundation of trust, laid by some really landmark regulations. In the US, you've got things like the Genius Act, which demands that stablecoins are fully backed by safe liquid assets. Over in Europe, the MiCA framework has created one big, unified rulebook. This clarity is exactly what gave big institutions the green light to jump in. So our dollar is now a fully regulated digital dollar living as a stablecoin. Now it's time to put that money to work. Where do all these transactions actually happen? Well, let's take a tour of the superhighways of this new financial system. You've basically got three main flavors. Centralized exchanges, or CXs, are kind of like the traditional stock market. Super fast and lots of liquidity, but you have to trust them to hold your funds. Then there are decentralized exchanges, or DEXs, where you keep control of your own money. More secure, but can be a bit slower. And now, you're seeing these awesome hybrid exchanges that try to give you the best of both worlds. High speed, but you still hold your own keys. Now, here's the thing. Big institutions, they don't just pick one exchange. No way. They connect to these powerful super hubs. Platforms like Talos pull in prices from dozens of different places all at once. This is a huge deal because it means they get one single view of the whole market and can use smart tech to automatically find the absolute best price, no matter where it is. Okay, so we're moving massive amounts of value through this incredibly complex system at lightning speed, which, of course, brings us to maybe the most important question of all. How on earth is it all kept safe? A key innovation here is something called multi-party computation, or MPC. Now, instead of having one single private key, which is like one single point of failure, MPC technology basically smashes that key into a bunch of different pieces. These pieces are held by different people or systems, and you need a certain number of them to come together to approve anything. It's just like needing multiple physical keys to open a bank vault. This tech allows for a multi-layered defense system. The first layer is the hot wallet. Think of this like the cash in your physical wallet. It's connected to the internet and holds just enough for daily trading and spending. The second layer is the cold wallet. This is where a much bigger chunk of assets is kept, completely offline and totally protected from online threats. This is what's used for those larger, planned-out institutional payments. And finally, we have the vault. This is where the overwhelming majority of assets, we're talking 95% or more, are stored. This is deep, deep offline storage with security that's basically the digital version of a physical gold vault. It's completely cut off from any network, giving it the ultimate layer of protection. So our dollar has officially completed its journey. It crossed the bridge, it became digital cash, it navigated the exchange maze, and it was protected by some serious fortress-like security. So what does all of this new financial plumbing really mean for the future? Well, it really boils down to 4 crucial takeaways. First, liquidity is the name of the game. The winners will be the ones who can tap into the whole market. Second, compliance isn't just a checkbox anymore. It is the infrastructure. Third, the market has clearly split assets into money versus speculative commodities. And finally, and this is the big one, it's all heading towards hybridization, a world where your bank account and your digital wallet are basically the same thing. You know, this quote from Soprasteria just nails it perfectly. It's not about one world replacing the other. It's about 2 worlds merging to create something way more powerful and efficient than either one could ever be on its own. Which leaves us with one final and